Hello and welcome to another post, and this is a series of forensic audit. In this series, I'm in this video in specific, I'm going to discuss on forensic audit. Now, the definition of forensic audit is not defined as such, but it means the usage of detective and analytical skills plus financial expertise plus understanding the legal structure, using all these three combinations and doing an audit of a company. So this is called this is called forensic audit. Now, why is forensic audit caused? Forensic audit is caused to detect or find if a fraud is happening in a company. Now, it is interesting to find out that there are many statutes like criminal penal code, there's Indian penal code, but there is nowhere as such a proper defined definition given of the word fraud. However, fraudulent is defined, which means an intent to do some fraud, but the word fraud is not defined, or I have not got till now into my whatever research I have done. However, Companies Act is defining the word fraud. Under section 447, it defines fraud. So the major words which has to be taken into consideration in this definition is, it says any act, omission, concealment of any fact or abuse of position committed by any person or any other person with a connivance in any manner with intent to deceive, to gain undue advantage from, or to injure the interest. So any act that can be caused, which can cause another person to make a decision on it, and when we know that act which that person is believing on is not true, or it can cause him an injury, so there is intent to do fraud, and intent to do fraud is fraudulent, and punishments are given for fraudulent activities. Every statutes which are being made are defining and using the words fraudulent activity, but very few definitions are there that defines frauds and defines what is intent to do a fraud. So further, now when it comes to forensic audits, I would like to give some 5-6 examples of how corporate frauds can happen. Like one is ghost employees. Ghost employees is a concept when there is no actual employee, but someone puts a fake ID into the payroll system and tries to generate certain salary on that name or certain. This can happen in smaller companies where the systems are very small and there is no line of control. Then there can be asset theft, where if there is no proper control on the fixed asset register and there is no proper physical verification done on a regular basis, there might be mismatch in the asset, and that might be because of some assets being taken out of the company. Also, there are certain times when excess reimbursements are being claimed, when, like for an example, the actual expenses become just 100, but when it comes to reimbursements, the employees are filing for 110. So the 10 rupees that is lost is actually a fraud. It's not a fraud from the employer's perspective, but it's a fraud committed by an employee. So scheming is when there's a customer to whom I'm always giving services, and now it's time when he's going to repay me back. He's going to pay me back the my management fees or my income. So instead of giving him the company's account, I give him another separate account which is made by me, by the fraud person. So the customer is transferring money in that account, and after that I am taking money from that account to the company's account. So these are certain examples of corporate frauds. So as the series progresses, we will find out more and more. We'll go in depth of how forensic audits are conducted and how corporate frauds can be detected. Thank you.